All right. Welcome again, everyone. We're excited to talk today about TraceCarbon. We've got a great list of attendees across a number of verticals, the energy, we have ag, industrial, as well as many others today. So my name is John Chappell. I'm the Director of Business Development for Energy here at BlockApps. And today I'm going to introduce our founder and CEO, Kieren James-Lubin, and he's going to walk us through an introduction to TraceCarbon. Kieren?
Thank you, John. And please advance. Hi, everyone. So we're here to talk to you today about TraceCarbon, which is a sustainability tracking blockchain network created by us here at BlockApps. So first, who are we? What do we do? We are the leader in enterprise blockchain. And what this means is, most of the folks here on the call today working at large organizations. And we found very early on when we started sort of the pre-work on this project in 2015, that enterprises had tremendous benefit to be realized from blockchain technology, but were challenged to adopt public blockchains like Bitcoin, Ethereum, and blockchain and public blockchains were sort of synonymous at that time for a host of reasons, but most specifically, inability to permission the participants, lack of data privacy, and insufficient performance. And so very early on, we started to work with large enterprise organizations like yourselves, solving all of those problems along the way, also reducing exposure to floating cryptocurrencies. Now, today, we may have all wanted that exposure. If you started in 2015, you're probably doing pretty well today. But nevertheless, it was and remains a challenge for adoption on the enterprise side. So we work in a variety of verticals, agribusiness, energy that John mentioned, large technology companies, but are always working to help industries and individuals work better together. And so the foundation is trust and managed by secure data exchange through our blockchain networks. And that is what we've been doing for a number of years and what we're continuing to do today. Next slide, please. So over the last really 18 to 24 months, as we've been working with customers, partners, prospective customers, we've uniformly seen sustainability rise from something that was a serious concern, but maybe not in the top 3 corporate priorities, to number 2 or number 1. And I think some of this is driven by consumer preference. So consumers want to know a lot more about what's going into their products, both from kind of source, provenance, origination, but also the associated carbon footprint, responsible sourcing, et cetera, from the regulator side and from the board side as well. So you're seeing a strong investor push as well. And there's a real challenge in getting in sort of the definition of sustainability. So investors want, and you're seeing a lot of the big asset managers start to offer, say, green ETFs, but no one quite knows what it means to be green. What is ESG really from a hard data perspective? And so this is a big challenge in everyone's understanding of sustainability and marching towards sort of a net zero future. Next slide, please. And thinking about blockchain sort of generally as part of that, our product specifically, of course, why is it helping with this data challenge, right? So first and foremost, there's the underlying technology from an architecture perspective is an immutable, time-stepped, cryptographically secured ledger. And what that means is that you get precise point-in-time readings, be they from IoT devices, source systems, manually keyed in events that are going on. And that data cannot be later altered to, say, change an estimated footprint, for instance. That immutable data trail of all the activity is actually very important in substantiating and being able to defend in an audit context the sustainability footprint that an enterprise has. Automated execution of smart contracts, bit of a misnomer. Really what they are data standards and workflows that allow kind of business processes to proceed. And in this case, the way they manifest is the calculation of the emissions footprint associated with certain time-based events. So there are various methodologies out there, many different ones that we support to calculate, say, what's the carbon footprint of a barrel of oil? What was the carbon footprint of that flight that I took? And so linking the actual event to the calculation methodology, which can grow complicated, executing in an automated manner helps to complete that data and trust trail. So consensus and validation. So these are multi-party systems, and quite often the sort of the old school architecture of the enterprise is very internal centric, and then adding external parties, say for procurement in a supply chain context, or auditors, or any of the trading activity that's going on, sort of after the fact as a bolt-on. In blockchain technologies, it's sort of built into the network at the start, and that means a lot of activity can be sort of more proactive, validating standards on the fly as data comes in versus during an audit, ensuring synchronization between parties so that all of the transactional records actually match as it relates to emissions-related activity. Privacy, private chains, authentication. So you may have heard, quite often we hear when people have heard about public blockchains and then they come to us, they say, this all sounds great, but can everyone see my data? Can everyone see the business data that is really critical to me? If I put my emissions on there, can people estimate my margins, all that sort of thing. And what's unique about enterprise blockchains, our blockchain in particular, is that it's actually a very granular level of data access. In fact, more so than existing systems like data stores, et cetera, whereby you can share at a down to a record level, even with fields within a record, data with just the permission parties. So if you're making a shipment to a customer of yours, all of the key data is available just to the two parties, right? Unless you want to disclose in a wider form, not to the whole ecosystem, which might include competitors, et cetera, who would like to have access to that information. So this is actually it's a really big benefit for blockchains versus other technologies that have more of a all or nothing view of data privacy. The technology integrates very well with existing enterprise systems, but also, so this is kind of the API's point, also IoT, for instance. So part of completing this data trail is validating with automated inputs as much as possible. So these are human systems too. There's manual activity tracked, et cetera, but quite often we find the highest quality data is coming from an automated form of some kind. And finally, just a simple user interface, onboarding, governance of who's in the blockchain, ability to customize it. So, ours is a fairly low-code experience whereby you don't have to understand the underlying details of blockchain technology to get the benefits. It's similar to a web or mobile programming experience and easy to manage the whole life cycle. Next slide, please.
All right, thanks, Kieren. So what I'm going to do is kind of build on kind of the broad introduction that Kieren gave and really talk about experiences that we've had and conversations that we've had with customers, in particular over the last 6 to 9 months, as they've expressed challenges around helping them understand really what their carbon footprint is. And many of the folks we're talking to are dealing with very multidimensional and complex operational systems. There is quickly becoming a need for transparency between what is a calculated value and what value was estimated. And just really understanding this very complete provenance of the CO2 emissions or the generated offsets, the who, the what, the where, the how. And again, these conversations is a very resource intensive reporting process. A lot of the data tends to be very siloed, especially when it comes, we'll talk in a second about really collecting that data from your scope 2 sources and scope 3 areas. And really there's an opportunity here for shareholder and public trust to really begin to use the immutable technology, the single source of truth provided by blockchain, to really begin to give that trust going out into the ecosystem, whether it be the public or the different shareholders. But again, so what we're looking to do is really understand the generation of the CO2, what's being remediated and how effective that is. And then when you create a remediation or potentially an offset, that you retire it. So then that it's only ever counted just the one time. In the course of my conversations, this is an anecdotal quote, but this has been told to me on a number of different occasions, is that right now that a lot of these companies, in order to avoid over-reporting, they're cutting their emission reduction estimates by as much as 50%. And this just causes a slower rate to miss targets, potentially missed opportunities. They're investing too much money in a project that's not as effective and potentially missing out on a very effective project elsewhere. And then just not knowing where it is. And again, it gets back to the trust. I think a lot of us have seen changes in the board level recently in terms of putting folks that are having a more active role in terms of the environment and the different ESG metrics. And this fits right in with that, helping them really understand what that is. So what is TraceCarbon? So at its very core, TraceCarbon is an enterprise blockchain network that provides harmonization and transparency throughout the CO2e ecosystem. So whether that's corporate reporting, internal reporting, product differentiation, project effectiveness, life cycle analysis, it all really is, at its core, is really understanding what your overall carbon footprint is. In a few minutes, and we're going to today talk a little bit predominantly about emissions. In a second, we'll talk about, in the sustainability world, it's really, emissions is probably the biggest buzzword right now and the biggest focus. But there are also many other sustainability things. We'll talk about how TraceCarbon is equally effective in those regards as well. And so it's built on proven technology that we've been using in production for a number of years now. And just because of the very nature of it, is very easy to scale. We're also very proud that our technology is actually a net zero emission blockchain, especially when compared to some of the public blockchain networks, Bitcoin, it comes to mind as well. But our actual technology we have is net zero. So what does the TraceCarbon world look like? Many of you will recognize the bottom portion of the graphic. It's really adapted from the greenhouse gas protocols. And so really what TraceCarbon does is it really begins to break down the different barriers, different data silos, and really allows you to get your scope 1 information together and harmonized, as well as your scope 2, which is all the emissions related to the energy that you buy. And then finally, and probably the most challenging piece of really understanding your overall carbon footprint, is that scope 3. And that's both the upstream folks you work with, raw materials, the manufacturing, transportation, even the employee commutes, down to distribution networks onto the next person, the ecosystem. For many large companies, we're talking about thousands of data points that need to be collected on a daily, weekly, monthly basis in order to truly understand what your carbon footprint is and where it stands in the bigger world. So these are some of the challenges, and we believe that TraceCarbon's unique technology, Kieren mentioned, we're built on a RESTful API, which allows very easy integration. And more importantly, for folks in the ecosystem, it allows a single point of integration where they can now become a member of this network and share data across the entire ecosystem, as well as helping them understand their own data. So again, once the data is in TraceCarbon, It's very easily to come out and talk about your corporate reporting, regulatory. You can begin to very clearly understand the effectiveness of your remediation activities, all the way over to product lifecycle management. Another way of looking at that is it's kind of with this graph here. We've kind of laid out a typical manufacturing process. But really what TraceCarbon allows us to do, it allows to be this underlying technology that really helps you understand everything that happens along every step of the way, from the raw material, manufacturing, transportation and storage, and then on into the consumer or end user. But at each step, there's an opportunity to track what emissions, what have I done to lower those emissions? Have I potentially been able to generate an offset? And again, we keep this immutable record, this ledger of everything that happens. And so we can begin to understand the net impact of every step along the ecosystem. And this again comes out to, we talk about corporate reporting, but it's really, I guess, maybe even better said in terms of corporate understanding. It's really beginning to have that data. We talk about harmonizing the data across the silos. We've talked to some customers that are challenged just with the different silos and different methodologies within their company, much less beginning to tackle the information they get from their energy providers in scope 2, and then all the different vendors and joint venture partners they might have in scope 3. But again, the cycle continues. You begin to now have an outlet to your customers, an outlet to any regulatory agencies, and very important to the next project financing. We believe that TraceCarbon can be a fundamental tool in your company, actually providing a new lever out there. You know, we've always talked about, you know, we have a productivity lever, we have a quality lever, and now as we become more conscious of the environment and sustainability, we believe that TraceCarbon can be the foundation for creating this emissions lever, so that you can now really begin to optimize your processes to really lower your carbon footprint. So what does this look like? How have we done this? And so what we've done is we've built this framework for TraceCarbon, and it's activity-based. And so what we come in and allow you to do is define an activity that is either an emission activity or an offset activity. And you can come in and put as much metadata as you would like around that, describe the group, the name, the geography. But most importantly, you can declare whatever methodology that you are using at that time. It may not be the best methodology. It may be an estimate. It may be an internal calculation. And TraceCarbon allows you to use any of those, but it does ask you to declare a methodology. And then what that calculation is going to be. You know, Kieren described smart contracts earlier, and this is one of the areas where the smart contract comes into play, is you say, all right, here is my activity. An example, maybe the activity is you want to track the emissions associated with all of your fleet vehicles. And so you begin to define which area, which set of vehicles, and then you can begin to talk about what that activity is. You can do something as simple as the EPA provides a methodology with a conversion factor, that they've already done the work, and they say that every mile driven, you have an emissions output of so many kilograms of CO2 equivalents. You can also, if you wanted to go and begin to put IoT devices on every vehicle, and you could really do calculations, you know, even more stringent. But again, it allows the flexibility to do that. And so one of the things that we'll kind of talk about is we believe we're still several years away from a convergence of standards, maybe not even one, but getting down to a handful. And so if we wait that long to begin to collect the data and understand it, it may be too late. So this allows you to get that methodology going, declare it up front. And then once you have your activities defined, you begin to then input an event, a time-bound event against that activity. And this now creates a digital asset for you on the blockchain. And this now has all the methodology associated. How does it calculated? Where was it calculated? Who participated in it? And now, once you have this digital asset, you can do whatever you would like to in terms of digital assets. You can combine it with others. You can split it. Let's say that this particular event, there are 3 partners now. The smart contract allows you to split that, assign it across the partners like that. And so you begin to build up these events, and the aggregation of these events becomes your footprint. And that leads to the ability to do your detailed internal reports. You begin to look at total emissions by source, by activity, your offsets, all the details. You can look and see what the predominant methodology is used. We also allow you to have a confidence factor. Sometimes if you're using an estimate based on maybe 5-year-old data and you're just adjusting for current production rates, maybe you have maybe 20% less confident in that data. You can assign that confidence factor in there, and then it adjusts the data for you. And again, you can track it. And probably the biggest key here, and again, Kieren mentioned it in talking about why blockchain is key to helping the sustainability challenges, is we allow for third-party validation. You can now have the opportunity for a third party to come in and validate your data and to compare it against much broader data sets. Or maybe you're working with one of the cloud companies who have tons of different analytical tools and data sets that you want to run it through, or machine learning or AI. For all those opportunities now for them, as you give them permission to your data to come in, look at it, and then give it that stamp, if you will, of approval. So this is important not only for regulatory reporting, but you would like to do this if you're operating in an area where you're been asked to lower emissions, and you have you can do a carbon tax avoidance if you can prove that you're lowering it. There are some areas, Canada, I know Colorado, the UK have done some things around carbon credits, which are really just you lowering. If you were 100 last week, this week you're 90, and that credit then begins to have some monetary value. And then if this project or activity you're working on is an offset, then now you actually have a CO2 offset, and maybe you want to have a third-party company like Vera come in and validate the data, and again, that brings additional value now to that offset, whether you apply it internally against your own emissions, or if you think you want to send that out to the marketplace. And then ultimately, like the blockchain, because as Kieren mentioned, you can control the data. And so now you begin to publish public reports, give them that confidence of what's going on and where your data is at there. So that's what TraceCarbon is. Again, we've talked about it predominantly in the framework of emissions, but really TraceCarbon is far more than emissions. It's water usage is a key piece in the environmental measures. It's responsibly sourced raw materials, understanding where those raw materials come from and how they were sourced. It's in the ag world, soil absorption, understanding the microgrid, what energy is being put back on and taken off, what's the source of that? Is it solar power? Is it from an EV to the grid? That differentiated products is an important part of what's going on right now in the sustainability world. Understanding, because the consumer cares, it's they want to know that their product is having a lower impact on the environment. And then understanding renewable energy. A big part of this is just as a consumer, when we look at our electric bill, it would be nice to be able to track back what portion of our electric came from a wind farm in West Texas versus a natural gas power plant. in there. So again, all of these things you can see how we can create an activity around water usage, differentiated product, and then again, create that digital asset that becomes the ability to track, transfer ownership, add, divide as it goes through the ecosystem. So that's about what TraceCarbon is and what it's designed, a little bit deeper dive. Now I'm going to turn it back over to Kieren and let him talk a little bit about some of our launch partners on TraceCarbon. Kieren?
Thank you, John. There we go. So one of the companies we've worked with and helped, in fact, we were working with them even before the public launch of TraceCarbon is Carbon Finance Labs, which is part of Oxy's low carbon business unit, Oxy Low Carbon Ventures. And they've created a product called CarbonSync, Make Emissions Visible, which ties into TraceCarbon. Next slide, please. So I think one of the things they like to say is the Docusign for carbon, and you kind of see that on the right-hand side here. Basically, using the underlying system to track, what's going on through a supply chain from kind of origination to management of carbon offsets to transfer, actually. And so you see the sort of chain of custody moving through the supply chain from, a physical perspective, and you almost have a label, if you will, moving with the product of all of the processes, adding up to that overall footprint, and then that can be presented as part of the end product itself. So very exciting. They've actually used the system in their business operations to support, I believe, the world's first net neutral large crude shipment that they did with a partner a few months back. So very exciting to see. Oxy, they've always been very forward on sustainability, carbon sequestration. They have a lot of technologies in that area, and using the system internally and with their trading partners to move in a sustainable direction. Next slide, please. Another one of our launch partners is Fuel Trust. Fuel Trust is a software startup, and they're very focused on the large maritime market. So maritime is about 1/8 of the fuel consumption in the world, and their insight, they've got a number of them, but I had a good chat with the CEO in person a couple months back at the launch of TraceCarbon, which was at the Blockchain for Oil and Gas conference in Houston back in September. Fuels are fairly unique, and they actually have a technology that allows them to, from a digital fingerprint, if you will, look at a fuel and look at everything that came in the production, all of the data associated with it, and analyze it for carbon potential, constituent components, et cetera. And actually, as that fuel moves through the supply chain, so from production, midstream, on to delivery, and then on the water, they can see that same fuel appear at different times in the supply chain. And what that really helps with is there's always, with any technology, but blockchain is not unique, there's always this sort of physical to digital bridge. How do you know that the record that you have in your system reflects what actually happened in the real world? And their ability to take a look at a fuel and impute, okay, we think that this, at least in part, came from this fuel that we saw earlier in the value chain there, helps complete that data picture, especially as, you're adding more participants to the supply chain, getting on the system as you go. Next slide, please. And so why TraceCarbon, right? It's proven. So we're, like we mentioned at the beginning, we're in a number of industries, all with big focus on sustainability. Our technology's been in production for a number of years now. Quick time to value. So we won't do a demo today. Maybe folks can follow up with John if they want to see the product. It's ready. The lift is relatively minor to start getting an understanding of your footprint. and what you're doing in your operations and how that's impacting your wider supply chain as well. So the security is really best, the best that you can find, better than any other technology. And again, I think we hear sort of mixed messages from externals who are talking about the security model for blockchains. On the one hand, some of the data is public on public chains. Everyone knows it's very well authenticated. In our situation, again, the data is controlled exactly as the customers like, right? So role-based access control, the data just gets to the right parties, but it has the same level of protection from an authentication perspective that it is the right data that public blockchains do, and that's better than any other technology in existence. So, and we've done a lot of work with the industry. So we are a vendor to the Blockchain for Energy Consortium, and they've been very helpful, and we're working with them on a variety of initiatives. They've been helpful at kind of informing from kind of the oil and gas side, sort of what they need from a sustainability product. And similarly, so some folks may have attended other webinars that we've done. We have an agribusiness focused offering called TraceCarbon, and that sector has informed a lot of our decisions as well, especially as agribusiness is increasingly a large source for carbon offsets. So you'll see, if you looked at the Microsoft sustainability report, for instance, I believe they bought quite a volume of carbon offsets from Land O'Lakes. And so these companies, obviously they're doing growing activity, takes carbon out of the air. They're sort of the other side of the equation as a realistic way to kind of balance the scales here. So working deeply with these folks, obviously John covers the energy sector for us, has really just informed that we're building the right thing. Next slide, please. So, if there's a take-home message, it's looking for understanding in the chaos. The ecosystems that companies are operating in are more and more complicated each year. There's a lot less in the way of vertical integration. Companies pretty much don't do this anymore. Your average Fortune 100 might have 100,000 vendors, 200,000 vendors, all of whom are contributing to that scope 3 footprint. And we just didn't build the IT systems at the center of the enterprise with that perspective in mind. We built them, thanks for that transition, we built them as very internal centric, right? So think of your company first. Even within your company, lots of data sources to reconcile, methodologies to apply, but when you start to include externals, go ahead and advance, everything gets much harder as far as how do you get an overall traceability? How do you understand the data that's coming from all of these parties, get it into one picture? And that is what TraceCarbon does fundamentally. So clear provenance of data, sharing it securely, real time, high level of automation, pulling all the events from existing source systems, reconciling it sort of on the fly, in the end, contributing to greater shareholder and public trust. Again, get a handle on the data, understand what it's doing, understand your impact in a wider supply chain context, and then work from there as you move towards your sustainability goals. Thanks, John.
Thank you, John and Kieren, for that presentation. Now, within the last 10 minutes, we'll take some of the audience questions. Thank you, everybody, for submitting your questions. We have quite a few, so if we don't get to your question, John will follow up post-event and answer your question directly. But let's go ahead and get started. So you said that the TraceCarbon platform is flexible. How will you work with standards as they evolve? Kieren or John, would you like to take this question?
Yeah, no, and so that's one of the key things that we did as we began to develop this, and we got this initial feedback and saw the need in the industry is that one of the nice things about Strato is it really allows us to evolve as things go. So maybe to start with, we think we have 4 key pieces of metadata that we need to track to really understand what that CO2 emissions data is. But as standards evolve, methodologies evolve, it needs to grow to 8 or 9, and that's not a problem. We're able just to add those in, and the beautiful thing is we still have that immutable history of where it started and then how the data evolves. So as standards evolve, maybe SASB becomes the reporting standard. Then we evolve and match with that. If Vera becomes the gold standard in terms of how to define and get approval, if you will, or validate an offset, then our model can do with that. But we're looking at all these things. We stay involved in PIDX. We're in different ag consortiums as they work through that. But we're keeping an eye on all these different data models as they're out there. And again, the beautiful thing about Strato is we believe that it can evolve as we kind of begin to converge, if you will. We still think that's several years away.
Thanks, John. Kind of on that ag note, we have a question here. How can BlockApps solutions help with validating carbon positive agricultural practices, like machine activities for planting cover crops or no-till seeding to harvest activities? Maybe Kieren, you'd like to take this one.
I'll take that one. It's actually something we're working quite actively on. So in what we've seen in agribusiness is that at least a significant part of the market is quite a lot more technologically forward than I would have expected. So ag tech broadly is growing really rapidly, and the level of industrial automation that you're seeing, even with sorts of medium-sized growers, is actually quite high. So in some of our work with Trace Harvest, we're usually getting the source data that's coming from the farm, from a precision ag system, like a climate field view, for instance. And so what that's telling us is in real time, what the grower is doing, what have they planted where, what sort of interventions have they applied at what physical location. We're also starting to partner to get some machine data directly as well. And so some of the big ag players, Bayer in particular, the customer of ours, have these, I guess I would call them bulk buying programs, whereby they're willing to compensate the growers if they adhere to certain practices, and in essence then will claim the offsets that those growers create. And then there's the challenge of figuring out, okay, how do we know that the grower actually followed those practices? We get that data from the precision ag system. It's all audited, loaded into the blockchain at the time of entry, and that gives the folks like Bayer the confidence that all of the steps were adhered to as agreed to their prescribed protocol. And then that gives them the option to do what they would like with their proven carbon offset.
Thanks, Kieren. While we have you, is Strato / BlockApps / TraceCarbon its own autonomous blockchain, or does it reside on an Ethereum or another blockchain?
Good question. So we started, we actually were the company that built the first Haskell version of Ethereum. So it's an independent code base. And very early on, we were working a lot with the public blockchain networks themselves, and still are interoperable with them. We've not found our customers pushing us to use the public blockchains. By and large, large enterprises want to keep their data off public chains. To that end, we made some enhancements to the technology, greater privacy, higher throughput, lower latency, better ability to integrate it inside the enterprise. And some of those enhancements we've contributed back through the Enterprise Ethereum Alliance to standardize how all of that is done. So we're built with sort of Ethereum at the core as a protocol, and everything in the Ethereum ecosystem moves over to us sort of fairly easily. But we've added a lot just to make the technology consumable by large enterprises. So I guess you can think of it as a standalone technology, but heavily based on and compatible with Ethereum.
Thanks for that explanation. A little bit more on Strato and TraceCarbon itself. When you say that TraceCarbon is a net zero emissions blockchain, do you mean that TraceCarbon technology is carbon neutral itself, or how does Strato compare to the energy usage of another blockchain, say Bitcoin? Maybe John, you'd like to take this question.
I can start, and if I miss anything, Yeah, so it's just it's our technology at our core is very different from the public blockchain. In particular, if you follow those articles, you'll hear them talking about mining, and that's a fundamental piece of the consensus mechanism for the public blockchain. So that takes a tremendous amount of computing power, which takes a lot of energy. Again, what we've done is we've focused to take the best pieces of the blockchain and adapt it to what the enterprise needs. And so in so doing, we've come up with a different consensus mechanism, PBFT, which is very low energy. And then especially then now when we combine with the net zero different cloud providers that have those options, when you run our solution now, then it essentially is a net zero solution. So we're not adding anything. So TraceCarbon doesn't add to the problem. It's a net zero solution of itself.
Nothing to add.
Thank you, John. Can you speak more on how TraceCarbon supports carbon credits and offsets?
Certainly. Maybe I'll start, John, you get going. So when we're speaking to prospects, customers, et cetera, we're finding that there's a lot of doubt in the underlying quality of carbon offsets. And moreover, there's doubt in what the, for any activity, to the kind of previous point that John was making about how TraceCarbon is organized, there's always a question of, well, how do we really know that the the emissions or the offset is what you say it is, right? And so what we support is completing the data and the calculation sort of lineage on an ongoing basis that proves what that offset actually is. And so that we see that as sort of the first step. And referencing again, I really like this Microsoft sustainability report. If you look in that report, they list out 30 or so projects that they sort of individually vetted, did a lot of due diligence on, themselves calculated the estimated impact over a certain time scale, et cetera. And so you see it's sort of a market that's very opaque still, where you have to have a lot of resources and a lot of know-how to sort of validate if you're going to kind of trade an offset, what you're actually getting, right? So TraceCarbon is lowering those barriers to entry to making sure that that data, that calculation is both present with the offset itself, so that they're kind of inequivalent, right? And potentially, to John's point, validated by third parties if you've gone to that step, and then is sort of transferred once and only once if you're in that sort of context. So again, we hear quite often about greenwashing, whereby if you have taken an offsetting action, you are in a sense incentivized to double count how much that offset was if you are kind of selling that offset to be claimed by another company. That sort of just falls out of the blockchain itself. There's a unique digital signature for that offsetting action, and then the transfer of ownership occurs on the blockchain, and it can't happen again after that. Anything to add, John?
No, that's it.
I know we're approaching time. I just have one more question that I'd like to ask. I think it'll be a quick answer, hopefully. Does TraceCarbon also help in certification? Like, for example, MIQ, Equitable Origin, Project Canary?
Absolutely. The data would allow us to interact with any of these other platforms that are out there and that do validation. Project Canary, MIQ, there's Valideer. I know Google has a number of these things out there. And so again, the beautiful thing about how the fact that we're built on Strato and the RESTful API allows us to very easily communicate and share data with those other platforms and really get that extra level of validation and understanding.
Thanks, John. I know there's a few outstanding questions from the audience. So as I mentioned earlier, John will follow up with you directly following the event. I know there's also one last question here from an anonymous attendee. And so if you wanted to just reach out to John at chappell@blockapps.net, if you'd like to get that question answered, you can do that. But I'll turn it over to John for the closing remarks.
Yeah, thank you, Jordan. Thank you for that. We appreciate all the questions, and the ones we didn't get to. Again, I'll follow up with that. I would just like to leave on this final remark is that if anyone would like to see a demo of TraceCarbon, just reach out and let me know. Happy to walk you through that. And we can really begin to see how you begin to generate, create an activity, generate an event, and then move that through the process. So again, we appreciate everyone's attendance today. And hope everybody has a great rest of the week and a great Thanksgiving holiday.
John, show your contact info before they all go. It's on the last slide, I think. Chappell at blockapps.net.
There it is.
And we'll also be sending the recording out to all of the registrants and participants. So you guys can also find that information there or go to blockapps.net/traceharvest. Thanks, everybody.
Thanks, everyone.
Thank you.